Hello, friends. Good morning, all of you. In the previous lecture, we have discussed the meaning, features, and process of forfeiting. Today, I'm going to discuss with you one important subject, one important topic, which is from the viewpoint of any business or enterprises. It is important. That is working capital finance. We are going to discuss today working capital finance, the meaning, nature and importance, need, and some categories of working capital finance. So let us discuss first what is working capital finance. In a ordinary sense, working capital indicate the amount of funds needed for meeting day-to-day operation of a business. Means whatever the day-to-day expenses the businesses have, or day-to-day fund needed for the operation, it is called, in a simple word, working capital finance. This is related to short term asset and short term source of financing. So whatever the day to day expenses or short term finance needed for businesses or enterprises, it is called working capital finance. It deals in both asset and liabilities in the sense of managing working capital. So it is in the excess of current asset or current liabilities. So whatever the current assets are there, so the current liabilities are more than that. Means suppose firm have to make payment of employees. So the for to make the payment, firm needs working capital finance. So a firm takes the working capital and make the payment of employees. So these are the day to day works of firm or any business. So it needs working capital. So working capital finance, it is just the excess of current assets or current liabilities. We can further elaborate concept of working capital. The fund invested in current asset are termed as working capital. So fund which is invested in current asset means, for example, purchasing raw material. So it is a current asset. So fund invested in that, it is called working capital. It is the fund that is needed to run day-to-day operations. So I have already discussed this, that day-to-day operations needs fund. For example, salaries of employees, raw purchasing raw material, then electricity bill, then other day-to-day expenses or day-to-day expenses of operation needs finance. That short-term finance called working capital. Like our body circulates blood to sustain our body, or blood circulation is needed for a living body. Like that, business needs working capital. So the role of blood circulation in our body, like that working capital have a role in the businesses. Generally, working capital refers to the current asset of a company that are changed from one form to another in our ordinary course of business. For example, from cash to inventory, inventory to work in progress. So work in progress to finished goods, finished goods to receivables from the receivable to cash. So these things need fund or short-term finance. So it is called working capital finance. So from the purchasing of raw material to getting the payment for finished goods, businesses need some finance or fund. It is called working capital finance. So basically working capital finance needed for short term, not for long term. but sometimes it is needed for long term also. We are going to discuss the categories of working capital finance also. We can make the different categories or concepts of working capital finance. We can classify working capital finance, working capital into two basic groups. That is gross working capital. The what is gross working capital? The sum of total current asset of a business concern is termed as gross working capital. Means whatever the current assets are there in a lump sum amount. Gross working capital is equal to stocks plus debtors plus receivables plus cash. Whatever is there, that is called gross working capital. What is net working capital? The difference between current asset and current liabilities of business. Business concern is termed as net working capital. So we can say in a nutshell, net working capital is equal to stocks plus debtors plus receivables plus cash minus creditors minus payables. So this is the net working capital. What are the other categories or types we can make? First is positive working capital. Positive working capital means the current asset or current liabilities. So assets are more than liabilities currently. The situation is going on. Suppose the salary have to paid 10 lakh, but businesses have 12 lakhs. So these excess 2 lakhs are uh, current asset more than current liabilities. So surplus amount is there. It is called positive working capital. What is negative working capital? Negative working capital refers to the excess of current liabilities or current assets. Suppose the businesses have to purchase, business have purchased 10 lakh rupees raw material, but actually the fund or cash available with business is only 8 lakh. Then excess 2 lakhs are current liabilities more than current assets. So it is called negative working capital. When negative working capital is there, then firm have to borrow from somewhere. The next category we can make permanent working capital. The minimum amount of working capital which even required during the dullest season of the year is known as permanent working capital. For example, the uh, fixed costs are there. Means the rent of the business building, then watchman salary, then these are the fixed. Even the production is not going on, still the business have to finance for these expenses, day to day expenses. So it is called permanent working capital. For example, the payment of employees, so it is a permanent working capital. What is temporary or variable working capital? It represents the additional current asset required at different times during the operating year to meet additional inventory or extra cash. Suppose firm got the suppose cloth producing firm have got the seasonable order. Suppose take the Diwali season. So in the time of Diwali, the demand for clothes increases. So to produce, now to supply that more demand, firm needs extra working capital or raw material to purchase raw material. So these excess seasonable need of finance can be called temporary variable working capital. So it is not permanent. Only due to seasonable demand increase, the need arises of this type of working capital. Now let us discuss nature of working capital. It is used for day-to-day expenses. Working capital is I have already discussed with you. It is used for day-to-day expenses. For example, purchase of raw material, payment of wages and expenses, etc. Then second nature, it changes from constantly to keep the wheels of business moving. So the working capital is the wheels of business to go forward. Without working capital, business cannot move or business cannot run. So it is called the working capital, it's called wheels of business. Working capital enhances liquidity, solvency, creditworthiness, and reputation of the enterprises. So, suppose the business cannot make payment of employees, then the creditworthiness or reputation will uh, downgrade. So the liquidity means the cash available with business is very important to finance day to day expenses. If a business purchases raw material but cannot finance as early as possible, then next time the raw material supplier will not supply the raw material to the business. So the credit worthiness has gone now. So the to keep liquidity, solvency, credit worthiness and reputation of enterprises, the working capital is must. It generates the element of cost, namely materials, wages, and expenses. So it has different heads. Under this, we can classify it as a material, wages, and other expenses. It enables the enterprises to avail the cash discount facilities offered by its suppliers. So enterprises can avail the cash discount facilities offered by its suppliers. It helps improve the moral of business executive and their efficiency reaches at the highest climax. So the working capital increases or improves the moral of business, its executive power or its efficiency can be maximized, or optimum use of resources of enterprises can be uh, possible with the correct supply of or the optimum supply of working capital. It facilitates expansion program of the enterprise and helps in maintaining operational efficiency of fixed assets. So if there is a fixed asset, the machinery is there, but the production cannot be increased without the raw material or additional hiring employees, then it will hamper the expansion program, or the production will not increase. So here the role of working capital finance. It avoids underutilization of business. So if machinery is large, then there are we have learnt in business economics, there are economies of scale of large production. But if there is no working capital finance to finance day to day expenses like a raw material, then to for electricity expenses, employee salary, then the large machinery cannot be optimally utilized, so it can be underutilized. Next is working capital finance, or working capital plays a vital role in business. So this capital remains blocked in raw materials, work in progress, finished products, and with customers. So this capital can be blocked or can be engaged into raw material. Suppose business purchased raw material, then it is engaged in raw material. Then if finishing goods are being produced, then the working capital blocked in work in progress. If customer have not paid it the value of production, then it is blocked in with customer. So it can block in different uh, phases. Adequate working capital is needed to maintain a regular supply of raw material, which in turn facilitates smoother running of production process. So production process is continuous uh, to the supply the need or to supply the market demand. But if the raw material is not available, then the supply chain can be break. So the business cannot supply according to the market demand. Working capital ensures the regular and timely payment of wages and salaries, thereby improving the moral and efficiency of employees. If employees not getting the wages and salaries on time, then what happen? The efficiency of the labor or the efficiency of employees will decrease, and they don't have the encouragement or inspiration to work hard and to contribute its optimum ability to growth of business. So working capital is needed to make payment on time of employees to improve the moral and efficiency of the employees. Working capital is also needed for the efficient use of fixed assets. So fixed asset means fixed machinery and other fixed things. So if working capital is not available, then the optimum use or efficient use of the fixed asset, fixed machinery is not possible. In order to enhance goodwill, a healthy level of working capital is needed. It is necessary to build a good reputation and to make payment to creditor in time. So it enhances goodwill. If goodwill you have learned in business management, then the healthy level of working capital is needed, not the less than requirement. So it increases or build a good reputation of business and make payment to the creditor in time. Working capital also help to avoid the possibility of capitalization or underutilization. Undercapitalization, capital is needed to produce some amount of goods, but capital is there. If there is a shortage of capital, then the business cannot run smoothly. It is needed to pick up stock of raw material even during economic depression. If economic depression is going on, the demand is not there in the market, then at this time also the working capital is needed to make the stock of raw material, uh, because this is the correct time to make the stock of raw material to produce finished goods when the market demand arises. Working capital is needed in order to pay fair rate of dividend and interest in time, which increases the confidence of investor in the firm. The not only the on the production viewpoint, but from the finance viewpoint also, the firm have some obligations like payment of dividend, then interest on the debt instrument or to the bank. All these are needed to increase the confidence of investor who are financing that particular business or firm, or those who are investing in the securities and in the financial instrument of particular business. So the to pay the dividend and interest on time, the firm needed working capital finance. Then what is the importance of working capital? It helps to measure profitability of an enterprises. In its substance, there would be neither production nor profit. So working capital is needed to make the profit and to produce the goods, and then only firm can achieve, the firm can make the profit. Without adequate working capital, an entity cannot meet its short-term liabilities in time. So, without adequate and sufficient working capital, the firm cannot meet its short-term expenses and thereby cannot run the smooth business smoothly. A firm having a healthy working capital position can get loans easily from the market due to its high reputation or goodwill. If the business have the high reputation or goodwill, the banks and other financing agencies can, or financing institutions can provide finance, because bank also the monitors the situation of business. If business is not running very well due because of insufficiency of working capital, then other loans or finances also market will not provide to this business. Sufficient working capital helps maintain an uninterrupted flow of production by supplying raw material and payment of wages. So I have already discussed that the sufficient working capital helps to maintain the supply chain or the production process, or without working capital the production process cannot be run smoothly, and the market arised in the demand arised in the market cannot be fulfilled. Sound working capital helps maintain optimum level of investment in current asset. So sound working capital means the sufficient working capital can maintain optimum level in the current asset. For example, the current asset means the purchasing raw material. So raw material is the current asset. So the optimum level of raw material should be there to produce goods and services uh, to fulfill the market demand. Then it enhances liquidity, solvency, creditworthiness, and reputation of enterprises. Already we have discussed this point. It provides necessary fund to meet unforeseen contingencies and thus helps the enterprises run successfully during period of crisis. So during the crisis period, and to meet the unforeseen contingencies arises, the unforeseen contingencies mean the contingencies arises suddenly or not expected by businesses, like a COVID-19 situation crisis. So the businesses have affected by this crisis like this, the sudden something can happen which is not expected. So it the working capital provides necessary fund to meet such type of unforeseen contingencies and to sustain business in the market. So friends, that much in this today's lecture. If you have any queries, question, please let me know, and write your roll number and name in the comment box, and write your name and roll number after only watching the video or listening carefully, and you have to solve the questions on the syllabus also. If you have any queries, questions, you can text me or mail me. Thank you. See you in the next lecture.